January 2023. Money Talks with CFA Society Nigeria. Let's talk about money.
If you've made a decision to aim for a long-term and successful finance career, taking the Chartered Financial Analyst CFA exam and studying the curriculum is an excellent way to ensure you have a strong knowledge base and top-notch skills. Are you ready to take the bold step to invest in yourself? CFA Society Nigeria is at your disposal, promoting the highest standards of investment practice in Nigeria. As an affiliate of CFA Institute, CFA Society Nigeria seeks to promote the highest standards of investment practice in Nigeria and to provide a vibrant community in which its members and other key players in the investment industry can interact and grow. When you have the CFA charter, you're globally recognized. Take advantage today by writing the CFA exam and joining us at CFA Society Nigeria. For more information, visit us at cfasocietyn.org. CFA Society Nigeria, making finance a force for good.
Money Talks. Money Talks.
Money Talks. Money Talks. Money Talks with CFA Society Nigeria. Let's talk about money.
Okay, hello everyone and welcome to Money Talks. Money Talks is a financial literacy program that is brought to you by CFA Society Nigeria. Off the air, I was taking a little lesson on sofa notations on how to pronounce my guest's name this evening. God will help us. Captain Smart is my name, Smart Uzechi for the financial circles. Welcome to the program. It's a holiday in Nigeria, but we are working and talking about money on this program. My guest this evening is Tumi Atayero, CFA. He is the head of investment management and the primary portfolio manager at Quantum Zenith Asset Management and Investments Limited. He has over 15 years of experience in the financial services industry across capital markets research, banking operations, business development, and investment management. Prior to assuming his current role, Tumi led the research team at the firm. He has worked as a business development officer and funds transfer and treasury operations officer at Zenith Bank PLC and as an investment analyst at Imperial Asset Managers Limited. Tumi holds a Bachelor of Science degree, BSc in Economics from Covenant University, Nigeria, and an Executive Leadership Certificate from Said Business School, University of Oxford, United Kingdom. He is a Chartered Financial Analyst, CFA, charter holder, and also holds a certificate in ESG investing from the CFA Institute. Ladies and gentlemen, make welcome my guest this evening. Let me start by calling him Tumi so I don't get into trouble with pronouncing the other name. Tumi, good evening and welcome to Money Talks.
Good evening. Thanks for having me. It's a pleasure to be here.
Good to see you. Today we'll be talking about investing basics, understanding risks and returns. That's what we're talking about with Tumi when we return from this break. Get ready, people. It is Money Talks on 92.3 Inspiration FM.
We are professionals. We are impact driven. We are CFA Society Nigeria, a member society of the CFA Institute Global Network of Societies. Our mission is to promote the highest standard of practice in the Nigerian financial services industry and provide a vibrant community for our members. The CFA Charter signals the holders' commitment to professional excellence. As thought leaders, we collaborate with stakeholders to ensure adherence to ethical standards, better education for professionals, and to build market integrity. We are the leading voice for advocacy in the finance and investment industry in Nigeria. To partner with us or become our member, visit us at cfasocietyn.org for more details. CFA Society Nigeria, making finance a force for good.
Welcome back to the program. Investing basics, understanding risks and returns is our topic on CFA Society Money Talks this evening. Smart Uzechi is my name, and of course, Tumi is my guest on the program. So, Tumi, let's get right into it. We all know that when they say the higher the risk, the higher the return. I remember my law of supply back in secondary school, right? This sounds like it. So that's a very popular truism, actually. But tell us now, what exactly does it mean when they say the higher the risk, the higher the return? You start by telling us what is risk and return in the context of investing.
All right. Thank you. So I'm going to start by debunking that truism. The higher the risk, the higher the return.
Okay,
I'm going to do that, citing two examples.
All
one
right.
personal, another one currently happening right now, like a life case. So the first one is in 2020, I invested in an agri-fintech startup that promised to pay 30% in 9 months.
30%?
Yes, in 9 months.
Wow.
That was really high.
That was a scam.
Okay. If you say so. But at the point, it's going by the truism, they are the risk, they are the return. It made sense, right? Because 30% for 9 months for a startup seemed like a fair deal. However, this is 2023. Right now, I've gotten zero interest, zero principal payment. So I guess the higher the risk, sometimes you get zero returns, right?
Do you still know where those guys are?
No, I moved on, actually. So, right quick, the second scenario I wanted to paint is if you invested in Ghana Euro bonds last year, the yields were very high, and then people were piling into the investment. But then they defaulted, right? And as we speak right now, if you're an investor in Ghana Euro bond, you are currently earning zero in terms of interest, and you're getting zero principal. However, the debt is very restructured. So there is hope that eventually you're going to be paid for maybe lower interest. So that's another scenario where the higher the risk has translated into currently zero return, and then later, eventually, you could get lower returns, right? So what that saying is trying to really speak to is that the higher the risk you're taking, you should get higher returns as compensation for taking that risk. But it doesn't always work that way, right? You have cases like I just printed where higher risk led to zero returns. I have another one where higher risk might ultimately lead to lower returns, right? But then in terms of investing, trying to understand what risk and return is. The academics will tell you risk is volatility. The changes or fluctuation in prices of assets. But practically speaking, risk is the probability or the chance that you lose money when you make an investment.
Yeah.
So that is risk. That is the risk everybody cares about. If I'm making this investment, am I going to get my money back, or am I going to lose my money? That's the risk you care about. Return basically speaks to what you expect to gain in terms of profit or gain on investment that you're making. Right, so in the context of investing, that's risk and return. I'd like to just quickly drop this truism I came up with myself, and I think it's incontrovertible. You can take it to the bank, and it stands the test of time. And
wow, is a sure banker.
Sure banker. And that truism is the higher the risk, the higher your chances of losing money.
The higher the risk, the higher your chances of losing money
on an investment. It's happened so many times. I just painted some scenarios, and it continues to happen. So when people think about investing, don't think about returns. Don't think about this truism saying they are the risk, they are the return. Think about, okay, let me make it even, let me break it down even further. So what that truism should actually say is the higher the risk, the higher the return. No, it should be the higher the return promised, the higher the risk that has to be taken for that return to be paid, and then the higher the risk that you lose your money.
Yeah, you're scaring investors right now.
No, sir, because it's good to have the fundamentals.
It's good to know
right.
what you're getting into
Exactly.
upfront, so there'll be no shocks.
No shocks. So that
in the process.
Like me, it will not be a case of what's in law in another 3 years when you make an investment. So it's good to know the basics actually.
All right. So this axiom that you've come up with now, your own truism, which you say is a sure banker, can take you to the bank and go to sleep. Does it apply to all types of investing?
Yes. So, because I just painted the scenario where before now, when you hear risk-free investments, risk-free investments are usually government securities, government IOUs. So if Nigerian government wants to borrow from the public, because that debt will be backed by the faith and credit of the Nigerian government. So what's the worst that could happen? The government will print more money to pay off that debt. So over the world, government securities are usually considered as risk-free investments. But then let's go back to Ghana. Right now, Ghana securities, local currency debt from the Ghana government actually defaulting on those debts. And that's because they had to restructure their debt. And right now, some investors are going to get less than they were promised. Some are going to lose some kind of capital. So there's really no investment that doesn't have risk. The earlier you clear that, the better. Know that all investments carry a type of risk. And then what you're looking to do is understand the risk of the investment you're making. Know if it fits your profile, if it fits your investment objectives before making any investment. But to say that investments are riskless, it's not quite true.
Oh, wow. In case you're tuning in now, you're listening to Money Talks. Money Talks is a financial literacy program and is brought to you by CFA Society Nigeria. Captain Smart is my name, and the guest on the program this evening, Tumi Atayero, CFA. He's talking today to us about investing basics, understanding risks and returns. In case you have questions or you want to make contributions, we are opening the phone lines right now. You can call 0817-313-6193. There's also 0700-923-923-923. We opened the phone lines early today so we can interact. Hello, good evening to you.
Hello, good evening, Inspiration FM.
Thank you so much for calling. Tell us your name and where you're calling us from.
Yeah, my name is Louis, Louis the 13th. Mr. Tumi, welcome on board, sir.
Thank you.
Yes, sir. So I've been listening to your intro, and I'm wondering here, like you're totally restructuring my own concept about risk, about investment. Hello.
Yes, go ahead quickly, Louis. Let's get a question quickly.
Okay. So now, I thought that investment or its returns are usually predicated on your risk appetite. You understand? Depending on the volatility of the investment that you are embarking on. Okay.
So Louis, okay, quickly round this off.
Okay, so because I was thinking, for those that want to be very conservative, they look for portfolios that are not really risk adverse. Then for those that a little bit, they can take a bit of risk, so they are on balanced portfolio. And those that are, they can really take their high risk takers can go for more high returns. Of course, more risk.
Okay, Louis, thank you. So just keep listening. I'm sure he's going to answer that question in the course of the program. 0817-313-6193, or you can call 0700-923-923-923. So you've twisted our heads right now. That's what Louis is trying to say. Hello, good evening to you.
Good evening, Captain Smart and Mr. Tumi.
Welcome. What's your name and where are you calling from?
My name is Ndidi, and I happy democracy day to all.
Thank you, Ndidi. Let's go quickly with 30 seconds.
Yes, I want to agree with what Mr. Tumi said about the higher the return promise, the higher the possibility of you losing your money. That is true. Because you remember the MMM Ponzi. A lot of people delved into it because of the high yield promise. But at the end of it, so many people lost their money. So I wasn't part of it because I calculated it and I looked at it that I was not ready to lose my money. So I did not even participate. I was not interested in taking that risk, and I was not also interested in the returns. So I let them do it, and I'm happy I did. I wasn't part of it.
Thank you so much. We appreciate you. So, phone lines are still ringing, but Tumi, let's come back here. So, tell us now, if investing is as risky as you have made it look right now, so what do you have to say about some investment offerings that actually guarantee returns for the prospective investors there? Can there really be returns without any risk?
Okay, no. If there's one thing I would like to establish here, it's that you can't have a return without risk.
Okay.
I mean, if you invest, you're automatically signed up for some type of risk. So now, like the other caller was saying, it's not a matter of what kind of risk can you bear, can you tolerate. So there can't be investments without risk, basically. And then when you hear people guarantee returns, I mean, the initial reaction should be to run. Because you can't guarantee. I mean, how can you guarantee the future, basically? Because that's what you're doing, guaranteeing returns. I mean, there are products, I mean, that are structured that way, fixed income products. And you have expectations that in 1 year, in a year from now, I'm going to earn 10%.
Yeah.
Let's take treasury bills, for example. I mean, like I said, there are government securities, virtually risk-free, and then the return is more or less guaranteed, right? But that's, like economists would say, ceteris paribus, all things being equal. There have been cases where countries defaulted on their debt, right? So there's an element of risk in all investing. So if someone promises you a guaranteed return, they could promise you that return based on the expectations of being able to perform. But then let's come back in a year's time and then evaluate, have they been able to perform as expected, or did macroeconomic issues, the things outside their own control happen to derail their business and then make them unable to pay that guaranteed return. So when I made my investments in the agri fintech, forgive me for keep going back to that, because that was they say experience is the best teacher. So you have to learn one way or the other. I was guaranteed the return of 30% in 9 months. I mean, this is 2 years, but this is 2 years, 3 years later.
The return is not there. Your principal also Otilo.
So the return has not returned. The principal too hasn't come back. So
good evening to you. Hello, good evening. We can hear you.
My name is Alice from Ojodo, and I'm just here to tell you that I am 100% sure that Maguire will win.
Okay, we're not talking Maguire. We're talking finance. Hello, good evening to you.
Distinguished Captain Swan, good evening, sir.
Thank you for calling.
Yeah, James Mbona on the line.
James, quickly, let's have your contribution.
Yes, I had to quickly go and do a report on risk and investment and return. And from what Mr. Tumi said at the beginning, I also have similar experience where we invested money. We came together as some group of us. We came together, we formed a company of our own, registered the company, and then what we do is to invest in small, maybe all this agriculture and anything at all that is promising. But we don't just put money. What we do is we do background checks. Are there insurances and all things like that in case of the thing didn't go well? How do we get our money back? So I don't know. I think a lot of people don't have knowledge when it comes to investment. I don't know if you can help us speak to that. Where is the place of doing your due diligence, doing the background checks? Are there going to be some form of insurance just to be sure that even if you don't get your investment, you can get your capital, your principal back, and then some other things because in 2020, we did that investment. The flood came and washed some of the, it's not as if it was a scam. It was not a scam, but, unforeseen circumstances.
Yeah.
Flood came.
The force majeure. Yeah.
Okay. Those things.
Thank you, James.
So maybe,
Thank you. Thank you so much. We'll get to that. And some messages here as well. This one says, good evening, IFM. What's the minimum amount of money you would advise someone to invest in your platform? We don't have a platform. We don't have a platform. Owode Saratu from Owode Diroko. We have not talked about any platform. Good evening, Captain Smart and the guests. As to me, apart from guarantee, there should be a legal means to money recovery. That is Patrick from Ikotu. Thank you so much for your message. And this person here, okay, your message is still loading there. So to me, we're moving very quickly now. Right. So you have to tell us, because you have actually aroused this fear in people's minds right now. So tell us, are there factors that may affect the risks or return of an investment?
Yeah, sure.
Talk to us about those.
All right, quickly. My intention isn't to discourage people from investing, but I'd rather leave you with the fear. So you're very conscious when you're making investment decisions than to go willy-nilly into any investment and then get your fingers burnt. So you can learn from other people's experience. So like the last caller was speaking to, there are unforeseen circumstances that could arise. The agri fintech probably didn't set out to be a scam, but then you had COVID happen.
Yeah.
all of a sudden they can't ship their products, or there's flooding, and then the farmland is
washed away.
So these are circumstances that we're not prepared for, that they did not envisage, but that crystallized, and then they led to losses for the company and for the investors in the company. So there are a lot of factors that could influence risk and returns of investment. I mean, there could be macroeconomic factors, so maybe inflation, interest rates, unemployment, economic growth or lack of it. I mean, so there are macroeconomic factors that could affect. There are company-specific factors, how a company is run. You could put your money in a company that is badly run. They make some really terrible decisions, and then you lose your investment, right? But overall, one critical fundamental principle of investing that listeners should go with is diversification, right? So when I lost the money in the agri-fintech, I wasn't wiped out. It was just a fraction of my investment.
So you didn't put all your eggs in one basket?
Absolutely did not. I know people personally that have been wiped out by FX investments because they literally took all their life savings, put it in an FX vehicle, they were wiped out. I know people that were wiped out by cryptocurrency investments as well. So you need to diversify. In the long run, that's what saves you. Knowing that, okay, my Bitcoin went to zero, which is not impossible, but then I have investments in treasury bills, I have investments in dollar securities, I have investments in equities, local, foreign, I have investments spread out. So if something happens to one particular investment, I have cushion from the returns of the other investments, right? So that's the most important thing. That in the end, that's how you hedge your risk, by diversifying across asset classes, across investment opportunities.
Thank you so much. And of course, you can call on the phone 0700-923-923-923 or call 0817-313-6193 should you have questions or you want to make contributions on the program. Tumi Atayero, CFA, is my guest on the program this evening, and we are talking about investment and the risks involved in it. Let's go back to the phone lines right now. Hello, good evening to you.
Hello, good evening.
Thank you so much for calling. Tell us your name and where you're calling from.
Yeah, my name is Hilda. I'm calling from Lagos.
Welcome.
Yeah, so this is a very great topic, investment. You can't take it out from us. And then what the speaker this evening has said that speaks to loss. Oh, fine. I've also been a victim. Agro partnership, farm sponsor, urban, and crowdfunding. So, but the lesson about it is there are just 2 points I want to pick out here. First, whenever you want to take a risk, always there are so many things you should also look at. Look at your age. There's a certain age where you would say, "What is my risk appetite?" If you are below 40, to an extent you can increase your risk appetite. After 40, you shouldn't even try that. He also mentioned different types of investments, which I will also add to it. Diversification is key. Money markets, mutual funds. Reach out to your banker friends for them to give you that information. Treasury bill. And again, note that you don't need millions to start an investment. As low as 50,000 naira, you can invest. When I see people doing ajo, I call it total foolishness. When you can do a standing order directly from your bank to your money market account, everything on your app. Just download an app on your mobile phone. It's very easy, just like you have your app for doing your daily transaction. Have this mobile app on your phone and do your money market investment. As little as 50,000 naira, you can invest.
Thank you.
It's so flexible. Even after a particular duration, you want, you are cash strapped, you want to increase your cash flow, you collect it. MTN was doing public offer sometime last year. They were also encouraging people to invest. Most times, what people face is lack of knowledge. Once you have information, trust me, you would be able to, bring yourself out and save yourself from financial freedom.
Thank you.
So basically, just get that information. When you have that information, you will not, you won't have any wrong investment. And no matter how little it is, you'll be able to invest. Thank you so much.
Thank you so much for your call. And that's why CFA Society started this program, to give financial literacy to the public so you can never get it wrong. What are the red flags to look out for when investment opportunity comes knocking? I tried calling twice, but the lines were engaged. Now, this is Patrick. Patrick, thank you so much for your message. Captain Smart, I asked about insurance for investment. James Obuna is asking the question. Thank you so much for calling. The last caller, brilliant. So, Tumi, before we go, because our time is actually up, like somebody asked a question here. This is Patrick. Patrick was asking about the red flags to look out for and all of that. So let's journey with this question. Is there any time that is good or bad for investing? For instance, the period we're into right now, subsidy is gone. And of course, we are dealing with the attendant consequences of that statement. The president saying today, give me some time. Now subsidy has been removed. How do people invest? Do investments become riskier at this time? And all of that. Very quickly.
All right, quickly. I'll start with the question asking the red flags to look for. So it's very simple. If the promised return is too good to be true, chances are it is too good to be true, and then you're going to lose your money basically. So if anybody had an investment that could offer 50% per annum return, why would they offer it to any other person? I mean, you'd probably mortgage your house and put everything in that investment if you were really convinced in it. So if the returns promised are too high, I think you should run. Then also, for when is a good time to invest, you should always invest. It's not a case of moving your portfolio around different asset classes. Certain asset classes, certain securities, certain investments perform better in certain climates, economic climates, and some underperform in certain economic climates. So all this might be a little too much for the average person. So the best advice I could give is get financial advice. Get someone in your circle, in your network, that do this for a living, that are very savvy in the financial markets. Then they can really explain to you the risk, returns, correlations, potentials of different types of investments. I mean, Hilda was very, her point was very pregnant. She said you should monitor where you are in your life cycle and let that determine the kind of investment that you make, right? I mean, that's brilliant. So if you are closer to 60, you're about to retire, you need to get off certain investments and then move into safer ones. If you're still young, I tell my colleagues all the time, you need to have investments in equities. You are too young, you don't have any family you are responsible for. You need to build wealth. You have to be in equities. It's perceived to be riskier, but then in the long term, the returns kind of outweigh the risk. Historically speaking. So you need to get financial advice, get financial help. Have someone that could really break down this thing. So it's not something you can do in 30 minutes, but you should really get someone and speak to someone to help you navigate financial investment.
Absolutely. You can look up CFA Society Nigeria on all social media platforms and on their website, cfasocietyng.org, and ask questions there. You get it. But to me, before we go, just to give people some level of comfort, for the banks, CBN regulates, all of that. And do we have any regulatory authority that has any kind of oversight function on the matter of risks and returns, especially as it concerns all these sophisticated or institutional investors on the one hand, and then the retail investors on the other hand as well, just in a minute?
All right. So there is a regulator, Securities and Exchange Commission. The investment space is actually highly regulated, and so they maintain oversight function, both institutional and retail. There are SEC rules that investment houses have to abide by. Recently, you'd see that there was a list that came out of some companies that their licenses were withdrawn. That's because they had run afoul of certain rules as provided for by SEC. So surely the investment industry is highly regulated, and but when you are about to make an investment, which is very important, one key thing to look out for is if they are registered with SEC, because that should give some level of comfort that, okay, there's some form of oversight, there's regulatory authority over that particular entity, right? So it's very important. Well, if you see an organization that is asking you to bring money for any kind of investment and they are not registered with SEC, they're not regulated, that's another red flag. You should basically run.
So does registration by SEC translate to getting my money back when investments go bad?
No. Not quite. So in the bank, you'd have what? I think NDIC.
Yeah. But it's a meager sum compared to how much you may have in the bank.
Right.
They don't give you all your money back.
No, so, when you make investments, like I said, you've already signed up for the risk potential
Wow.
loss. So it's the name of the game, right? You get returns, you win some, you lose some sometimes, but then you can improve your chances of winning most of the time by being very selective in kind of investments that you make.
Wow, I wish you could go on and on and on, but time has not caught up with us. We'll draw the curtains here, but this program continues next Monday at 4:30 p.m. Hoping you're going to join us at that time. We've had here Tumi Atayero, CFA, and he's the head of investment management and the primary portfolio manager at Quantum Zenith Asset Management and Investments Limited. Tumi, thank you so much for coming this evening. We really do appreciate you.
Thank you for having me. It's been a pleasure.
Smart Uzichi is my name. Enjoy the rest of the evening and join us again next Monday at 4:30 p.m.